Hey everybody, welcome back to the channel. Today we're going to discuss why now is not a bad time to buy, depending on your price point. As the real estate market continues to evolve, it's essential for prospective home buyers to analyze current market conditions and make informed decisions. While it may seem counterintuitive, there are compelling reasons why now is a good time to actually buy a home, even in the face of higher interest rates. Today we're going to explore the unique advantages of purchasing a home in the current market, going over the historically low inventory, persistent demand at or below the median house price, and the potential risks of waiting for interest rates to decrease before you purchase. One of the key factors influencing the current housing market is the historically low inventory of homes listed for sale, especially in the more affordable home segments which are at or below the median price. The scarcity of available properties has created a situation where demand constantly outweighs supply. And I know a lot of people aren't going to be happy when they hear this, but because we live in a supply and demand environment, this is causing house prices to be relatively stable or increase at or below the median price. By entering the market now, home buyers have a chance to get in before house prices increase further, potentially saving money in the long run. Let me paint a picture of the last few years in mortgage and the real estate market compared to today. In 2020 and 2021, during the pandemic, there was relatively low inventory, but that's only because there was basically unlimited supply due to the low interest rate environment, where a lot of people could afford a lot more home than they historically would have been able to afford. Now, to the naysayers out there, something like 80% of all US homeowners have fixed rate debt at or below 4%. And also, a common misconception is that if the value of your home temporarily for a year or something goes underwater from where your mortgage currently is, they cannot call your loan, meaning they cannot force you to sell your house. You just have to keep making your monthly payments. And as you continue living your daily life as usual, years later, that is all irrelevant. And during this fierce market, people were waiving basically every single buyer protection that exists. People were waiving option money. People were waiving inspection. People were waiving appraisal contingency. People were waiving finance contingency. Basically, if they chose the wrong lender and couldn't close on time, the seller was going to be able to keep their earnest money and their option money, no questions asked, and choose one of the 25 other offers they had on their property to try up next. It was very precarious for most buyers, and you had to make a decision in a split second. Let's contrast that with today. The inventory is really historically low. In some areas of the state, we're down to a couple weeks or less than a month of normal inventory, meaning under normal sale circumstances, there's only enough homes for a few weeks before there's no more homes for sale in the market. Normally, this would be 1, 2, even 3 months, and in certain more rural areas up to 6 months where it would take people on average to sell their property. The buyers of today do not have the fierce competition they did during the last couple of years because the interest rates are currently higher. Now, a lot of people are going to say, what if they never go lower? They may not ever go lower, but that doesn't mean the prices will go down. You see, because so much of the housing market is already embedded and grandfathered in at their sub 4% fixed rate debt, unless something totally catastrophic happens, which is extremely unlikely, there's no reason that there will be forced sellers in the same way there was during 2008. So what this means is right now, when prices feel like they're high and interest rates feel like they're high, now is actually a good time to go out shopping, because the people who are selling their homes and their property has been on the market for 30, 40, 50 days, they are selling that house for a reason. They may or may not be a forced seller, and you may or may not be able to negotiate very heavily with them. Whereas during the pandemic, you were not able to negotiate basically at all. So this gives opportunity for people to get in a great neighborhood, a great school district, a place that's very convenient for them and their lifestyle, and negotiate as hard as possible, because that seller may be forced, meaning that they got a job transfer, that they are retiring and they need to downsize, their fixed income situation will not support the current payment. Or this is Texas after all. Maybe they pulled the trigger on a shiny new construction home and they must sell their departing residence to reduce their monthly liabilities to qualify for the new mortgage and or to get the down payment necessary for the new property as well. In fact, last September, I helped a couple down in Waxahachie, and they basically killed the seller because we found out that they needed to sell ASAP to close on their new construction home. They had a rough deal, but our buyers had a great time. So what happens when there continues to be no or very little inventory at or below the median sales price and interest rates go lower, meaning more and more people can afford the payment. There simply are more buyers and more competition. If tomorrow interest rates went to 3%, it would not actually benefit you because you wouldn't even be able to get a house most likely because there would be a bidding war on every single house under $1 million for the most part. So by taking action now, you can secure a home that you love before any potential frenzy occurs, and you don't have nearly as much or any competition. Although interest rates are currently higher than the last few years, it's crucial to evaluate the bigger picture. Over time, interest rates fluctuate, and they are still relatively low compared to historical averages. By locking in a mortgage now, even at what feels like a high interest rate, buyers will have the opportunity to enjoy the benefits of home ownership, such as building equity, building roots in the community, having that feeling of stability in their lives for them and their family and their children. And if rates go down in the future, as a lot of people and industry experts do anticipate, you can always refinance your loan at that time. It's much easier to refinance a mortgage than buy another house, especially in a low interest rate environment where you would have a lot of competition. In this way, buying now can result in long-term savings, as opposed to waiting indefinitely for an uncertain rate decrease. Where do you think rates are going? Where do you think inflation is going? Make sure to comment below. I want to hear your thoughts. Am I crazy? Am I totally right? Let me know. I think a lot of people are suffering from recency bias right now. I talk with a lot of people about this, a lot of clients, a lot of friends and family, where over the last couple of years, 2020, 2021, it has been the instant gratification culture where people are day trading and they think if they don't earn 10% in a day that they're losers and that they're getting ripped off, when historically that would be a very high return for a year. And one other important thing about recency bias that might be clouding a lot of people's judgment is that they think 3% is a normal interest rate on a mortgage. It's not. It's never been. That's a historical low. When people said it was a historical low, they said it for a reason. So when interest rates are back up to 5, 6, 7%, which is not high historically, that is a rebalancing of the market. I think the other thing people are also missing out on is so much inflation and money printing from the government has occurred in the last 2 or 3 years that they are thinking that the US dollar still has the value it had in 2019, when that is absolutely not the case. People really need to reevaluate what they think things should cost versus what they actually cost in US dollar terms. As of today, eggs are like $6, $7, $8 a dozen, whereas in 2020, early and late 2019, I remember they were $2.80, $2.90 at Costco here in Plano. If you're in Texas looking to purchase, I highly recommend you check out my other long form videos. I have a ton of fantastic, valuable information about down payment assistance programs, mortgage credit certificates, and all sorts of other options that can get you into a house much simpler and easier than you thought possible. For everybody else, make sure to subscribe and check out all my other videos. There's a lot there. We'll see you on the next video. Have a great day.